All right. What I told traders in the room is this. We have a trade setup coming up on gold. And it should be pretty explosive because we're breaking outside of high value. What happened with the market? We have three charts we predicate our trades off of. First of all, we have a black market profile chart over here. It gives us support and resistance on price and volume profile. Then we have a white chart called the J signal chart that has also high value in red, low value area in green. Okay? So the black chart and the white chart, that's what sets our trades up in the room. That sets all our trades up. And then we have a gray template called market delta right here that got us in at these lows to the exact bar. So my methodology is very simple. I let the black chart and the white chart set my trades up. And then I let my delta, market delta, close positive market delta green for buys and negative market delta red for sells. All right? Let's go over this last setup. Let's take a look at it. Here's what we got. Sell right here, guys. 75% of your contracts off. Whoever took that long, 75% off right now, guys. 126.90, almost 127. 75% off your contracts right here. Good job, gold traders. What I said was this. If we get outside of value, high value, look for the first retracement long. First retracement long, either it's going to rest right here on high value and touch it, or we can take the first Fibonacci dots long with positive market delta. Here's where my traders in the room, my members that said they got that long, for you traders, that is a number 5 wave pattern, and this is a long this morning, pre-news also. Gold has been 2 for 2 off my market profile this morning. Now take a look at it. Here's what it did. When it got into, right here, when it got into the retracement, it broke out. When it retraced right here, outside of high value, I said, look for positive market delta. So right when we get positive market delta, you go long that trade with those blue Fibonacci dots right at the close of this bar. When it closes right there at this bar, you want to go long. Buy the offer. Go long. Your stop loss, you have a hard catastrophic loss of 15 ticks. You don't risk more than $150 on gold. But then you put your stop loss 2 ticks below that swing low. Adjust it. If you use Ninja Trader, use Chart Trader. Drag it 2 ticks below that swing low. That is now your stop loss on the trade. So you enter at the close of this bar. This is a trade setup that happened before it broke retest that I said to look for on gold. Gold was set up really pretty. There's your break. There's your retest. Positive market delta. Anything over 50 on gold is a huge market imbalance on my market delta. It's 87. 87's above 50. There's your long. Your long, you got long right here at 22.50, got as high as 27. I said gold has a potential of $500 per one contract before it pulled us in. Potential. It just hit $500 per one contract. Okay? So you break, retest the high value area here. Here's your break retest. I said you got a potential of $500 per one contract when it's breaking out right here. I said the first retracement, you have a potential of $500 potential per one contract with a maximum risk right around $150 would be maximum, but that should have been $130 risk. And you just made $500 per one contract before it happened. Okay, that's your possible risk maximum. If you got this one down here, you had around a $700 trade potential. $700 trade potential, $500 trade potential here. There's a $700 here, trade potential, $500 trade potential here. Now, what we do is we do scale. If you got long here this morning with trend, positive market delta happened right here at 7:53 this morning. Right there. Look at the positive market delta at 7:50 this morning. 98 for God's sakes. 98. Anything over 50 on gold is a huge market imbalance. It hit 98 at 8 o'clock this morning. 98. Huge market imbalance right at the low. That's where my Fibonacci dots start plotting. Now look, Here's where the fibs start plotting. Check this out. There's where the fibs start plotting. Blue Fibonacci dots. It comes in. I get positive market delta 98 right at the low. I'm already in an uptrend with my trend filter. It's a motive wave. I'm on low value area, which is awesome also in an uptrend. And positive 98. That is a buy signal. Then you put your stop loss 2 ticks below the swing low, and there you go. So here's your 2 buy signals off market delta. Look how they both coincide with the fib dots. Now watch. Look how they both coincided off the Fibonacci dots. There's a positive 98. There's no positive 50 right there. They both were buy signals. This is a wave 3 pattern, a wave 5. Both predicated off market profile though, James, right? That's the first gold trade called right there, this last one. Oh, the first gold trade's called a wave number 3. They're both called number 3 patterns, buddy. You can just trade the number 3 in the room and do very, very well in the room. Okay? That's where the swing low is, Paul. This small stop line right here, guys, the small line right here below the Fibonacci dot, that is just where your swing low is. You should put your stop 2 ticks below that swing low. All right? So here's the 2. Let me go this again. Here's the 2 buy setups. Here's the one that I called out before it happened. Here. I said look for the first retracement. Gold is setting up very pretty. We'll look for this on crude today too. So these are my 2 buy setups this morning on gold. And they were both, check them out, they were both predicated off of my positive market delta. Here and here, explosion. This is how you're going to do it in all markets. S&P 500, Dow Minis, doesn't matter. NASDAQ Futures, Russell 2000, FOMC comes out, same thing. Get outside of high value, look for the first retracement. Get outside of low value, look for the first retracement. Use positive or negative market delta. Now, what if I'm wrong? We're going to have losses, right? Let's say, what if I'm wrong? What you need to do on this positive 87, if you are wrong, traders, if this was your entry right here in this last Fibonacci retracement, if it's going to be wrong, this next bar, after you enter the close of the green bar here, at the next bar, if it closes red, you have to get out of the trade. You have to take a small loss. This is how you're going to protect capital. If this would have failed and you got positive market delta, which we did, we got positive 87 right here, right? Positive 87 right here. If the next one closes red, keyword closes red, take a small loss. But it didn't, did it? $500 per one contract potential on the first one. Second one, $700 trade potential on the first one. Just since 8 o'clock this morning. That's how you do high reward risk trades. We're letting market profile set it up. The same trade's been happening for 31 years. 31 years. Show me one indicator that works like that. 31 years, same setup. You break inside, outside of value, you let market delta pop you in. But if it's wrong, and there will be chances that are wrong, there will be some times where it's wrong in all markets. You have to protect capital. If I get long positive market delta 87 here on this first retracement, and the next one turns negative, closes red, get out. Take a $60 loss. Take a $70 loss. Take an $80 loss per one contract. Don't take $150 though. You don't need to. Because when market profile is right, it's dead on. You get these $700 trade potentials, $500 trade potentials, $800, $1,000 trades. But when it's wrong, take a small loss. That is the difference between a novice trader and a professional trader. You got to know where to take a loss. Okay? So that's how we do it. On this white chart, it's very simple. You should not be trading unless you get inside or outside of this red or green line. The best one is with trend filter. My trend filter over here is up. Look at it. It's been up. The magenta MA, it's been angled up. If it's angled up, your best trades are longs. It's 2 longs. Best trades are longs. But look how cool this is once you understand how to trade profile. Look at the launching point. I said we have a big launching point today on gold. Look at this launching point. Why did I say that too? Look at the rejected levels. rejected off high value, rejected off high value, rejected off high value. That creates a launching point. The same thing's going to happen on the S&P. Same thing's going to happen on the Dow Minis today. You're going to have a launching point with the FOMC meeting. Find the rejected areas, and that's your launching point on a break retest. They're both called number threes because they're playing off profile there, James. Okay?